Good morning, dears, and welcome to Super Coaching for UPSC by Textbook. And today we meet here to discuss one of the very important topic of Indian economy, and that is related to current affair, and that is none other than tax GDP ratio. That in the budget, after the budget, this was the statement of our finance secretary that the tax GDP ratio is 11.6% and it is all-time high. So in that context only, we are going to discuss the very important topic of Indian economy. That is, what is the meaning of tax GDP ratio? What is the significance of tax GDP ratio? What are the consequences of low tax GDP ratio? What is the reason for low tax GDP ratio? And what can be the measures in order to increase the tax GDP ratio? We are going to discuss all these aspects of tax GDP ratio in today's session. So let's start our today's session, and it is most important and most interesting as well. So let me start with this that what is the meaning of tax GDP ratio, and what is the meaning of tax GDP ratio? Meaning, that means why. First, let me tell that why it is in news. It is in news because tax GDP ratio in case of India for 2023-24 it has been 11.6%. I will discuss that what is the meaning of it, and it is all time high. It is all time high. Okay, but as per the World Bank, that it should be, that means for the developing or for reducing the poverty, it should be 15%, at least 15%. It is not that in my opinion, rather in the opinion of World Bank, that tax GDP ratio should be 15% in order to reduce the poverty or in order to have the economic growth. Okay, so that means although 11.6% is all time high in case of India, but it is still very low as per the recommendation of the World Bank. So that's why it has become very important. That's why we are going to discuss this in detail. So let's start our session. So first, let me explain. Neha, very good morning, dear. Very good morning. So the thing is, first let me decide that define that what is the meaning of it. That what is the meaning of tax GDP ratio? Tax GDP ratio means tax to GDP ratio measures. What it measures? That what is the size of countries? Be very clear. Size of the country tax revenue in comparison to its gross domestic product. What does it mean? That means if the country's GDP is 100 rupees, 100 rupees, that means, and the country's tax revenue is 11.6 rupees. So what does it mean? That what is the meaning of GDP? GDP means the total monetary value of all the goods and services produced in a financial year. Whatever the goods and services are being produced, if we calculate the monetary value of all those goods and services, that is nothing but GDP. Suppose this is an economy, and in this economy, suppose we are producing 10 goods and we are producing 10 services. So that means, and the monetary value of this 20 goods or services is 100 rupees. So that means out when this there is 100 rupees goods and services are produced by the country, the government is going to get 11 rupees 11 rupees 60 paise. Government has got 11 rupees 60% as a tax revenue. This is the meaning, that if the size of the GDP is 100 rupees, the government has got 11 rupees 60 paise as a tax. Okay, because what are the sources of the government revenue? It can be tax revenue, it can be non-tax revenue. Okay, so the tax revenue, it can be direct tax, it can be indirect tax. So that means when we combine the direct tax and indirect tax, government is going to get the 11 rupees 60 paise. This is the meaning. So let me read it once again, and what is going to be the significance of it, we will discuss it in detail. So what is the meaning? That tax GDP ratio measures what? It measures the size of country's total tax revenue collection. Okay, what is going to be the total tax revenue collection in comparison to size of GDP. So we discussed it. So that is nothing but the meaning of tax GDP ratio, and it is all time high. it is all-time high, as it has been indicated. That means that in 2023-24, in the budget estimate, that means in the budget estimate, when we proposed the best budget estimate, at that time the government was considering that it will be 11.21% only. It will be 11.1% only. But the tax revenue has increased and it is 11.6%. And for the next year, that government is considering that it will increase to 11.7%. 11.7%. That means if the size of the GDP is going to be 100 rupees, the government will get 11 rupees 70 paise in the next financial year. It is expected. So that means for 2024-25. But 23-24, in the revised estimate, government has said that in the current financial year, our tax revenue is, that tax to GDP ratio is 11.6, meaning if the GDP, value of GDP is 100 rupees, government has got 11 rupees 60 paise through the taxes. And what is the meaning of it? What is the significance? It has the great significance. So how we can calculate the tax GDP ratio? That is nothing but total tax collection during a period by the government, that is in a financial year, whatever is going to be the tax collection by the government, that means that is going to be divided by the size of GDP, then we are going to get the tax GDP ratio. So be very clear that it is all-time high. Okay, so that means it is first time that government has received 11 rupees 60 paise as a taxes if the size of GDP is 100. Okay, so this is, now we are going to discuss that what is going to be the significance of it. Okay, so that significance is nothing but what it indicates. What is the meaning of it? That means the financial health. If the government is going to get more and more tax revenue, what it indicates, that financial health of the government is going to be stronger. Financial health of the government is going to be stronger. We can say that there is going to be fiscal consolidation. Government is going to have more and more revenue, more and more resources. So that means it can increase the expenditure, especially capital expenditure, which is instrumental for the economic growth in the economy. So the very important aspect is, very first significance is, government is going to have more and more resources. If the government is going to have more and more resources, government will be in position to spend for the capital formation, for the capital expenditure, which is instrumental for the increasing the economic growth. We have discussed in detail when we were discussing the budget. So that means that if the government is going to have more and more tax revenue, what it indicates, that government, there will not be any, that means that the tax revenue, that tax that is going to be, that revenue deficit is going to be zero. If the government is going to meet the tax revenue expenditure with the revenue receipts, and from where government is going to get the revenue receipts? Government is going to get the revenue receipts through the tax receipts and non-tax receipts. If the tax receipts are going to increase, the government revenue receipts are going to increase. And if revenue receipts are going to match with the revenue expenditure, that means the revenue deficit is going to be zero. And that means at least it is going to be reduced, if not going to be zero. Then whatever government is going to borrow, the government is going to borrow only for the capital expenditure. That is nothing but golden rule of budgeting. What it means, that it does not matter. What is the meaning of golden rule of budgeting? The meaning of golden rule of budgeting is that it does not matter that how much amount of government is borrowing. But it really matters that for what purpose government is using those borrowing. Nowadays, that means government of India is taking borrowing, but government of India is using those borrowings for the revenue deficit as well. That is not good for the economy. Why? Because you are not able to meet your day-to-day expenditure with your day-to-day receipts. That is nothing but tax receipts and non-tax receipts. If the tax receipts are going to increase, definitely the government, that means government will be in position that to meet out their day-to-day expenditure with their day-to-day receipts. Then whatever government is going to borrow, it is going to borrow only to have the investment. and that is nothing but capital expenditure. If it is going to be for the capital expenditure, that means it is going to be instrumental for economic growth. The economic growth will increase, production capacity will increase, the employment rate will increase, national income will increase, per capita income will increase. So this has the great significance, and this is the first time that the government has received 11 rupees 60 paise, 11.6%, if the size of GDP is 100 rupees. And but it is quite good, but it is, as per the World Bank recommendation, it is still far away. That means it should be 15%. It should be 15%. But it is matter of celebration. That means that government is celebrating, but we are far away. Okay, so this is the meaning of financial health. Fiscal health of the government, financial health of the country is going to be improved. Not only this, that means government is going to have the cast wider fiscal net. What does it mean? Wider fiscal net means government will be in position to have the that means if the government is going to take the borrowings, government will be in position to invest on the capital expenditure, which will be instrumental for increasing the economic growth. Okay, it will have that means it will reduce the borrowing needs, because that revenue of the government is going to increase. So the requirement of borrowing going to decrease. If the requirement of borrowing is going to decrease, need of borrowing is going to decrease, the fiscal deficit is going to decrease. Fiscal deficit, that the payment liability, interest payment liability of the government is going to decrease. But at the same time, what is going to be, according to the World Bank, what should be that tax revenue above 15% of the country gross domestic product, GDP are the key ingredient for economic growth and poverty reduction. Be very clear that ideally it should be 15%, but we are celebrating, although we are only at 11.6%, but we are celebrating. It has become the statement. It has become the news. Statement of the finance minister, finance secretary has become the news. Okay, so that means, and in the next financial year, it is expected to be that it is going to increase 11.7% as per the budget estimate. Okay, in the revised estimate, it may increase. So we can say that it is very far low from the recommendation of the World Bank. So we are going to discuss that what are the reasons for low tax GDP ratio in Indian economy. That's why in this context we are going to discuss that what are the causes of low tax GDP ratio in India. So what is going to be, very first, that in case of Indian economy, that there is more business activities are taking place in the informal sector. Most of the business activities are taking place in informal sector, unorganized sector. Since they are taking place in the informal sector or unorganized sector, that's why what is going on, that means the tax revenue of the government is going to decrease because they are not paying taxes. Okay, so that means a large unorganized sector and tax evasion, and there is tax evasion. That means they are not paying, they are avoiding the taxes, or they are evading the taxes. Because of that, generation of black money is taking place, and because of informal sector, the government do not have the idea as well. So this is the reason, because most of the business activities are taking place in the informal sector, that Indian economy is unorganized. Second is, there is 25 crore households, and out of 25 crore, 15 crore are in the agriculture sector. Okay, 15 crore household belongs to the agriculture sector, and the agriculture sector is exempted from the taxes. Agriculture sector has been exempted from the taxes. They have not to pay any tax. If we consider there is 25 crore household in India, and out of 25 crore household, 15 crore households belongs to the agriculture sector, and those 15 crore household, they are not giving the taxes. That's why there is low tax GDP ratio. Tax rate, tax exemptions and tax deductions and incentives influences the total tax collection. That is known as tax subsidy. As such, that government of India, that to the business sector, government of India is giving tax exemptions. Government of India is also giving them tax incentives. That means they are going to waive off. They are going to waiver off many tax liabilities of the business sector. That is known as tax subsidy. Tax subsidy. And because of that, when the government is going to waive off the tax liability of the that business sector, that is going to obviously decrease the tax collection of the government, and in that condition government has to take the borrowings. So that is the reason. And that means tax rate. What is the meaning of tax rate? That tax rate should be optimum. If it is going to be increased, or it is going to be more than optimum, or it is going to be less than optimum, then the tax collection is going to decrease. Because if it is going to be more than optimum, then the Laffer curve will come into picture. Laffer curve will come into picture. And I have discussed it when I was discussing the taxation in my YouTube session. So that means tax rate should be optimum. Okay, or in case of India, it is said to be the tax rate is high, that high territory, and that's why there is tax evasion and tax avoidance in case of India. So that because of that, Laffer curve come into picture. So the tax rate should be optimum. That means because of tax exemption, deduction and incentives, that is known as the government of India is giving the that means tax exemption, tax deduction and tax incentives to the business sector. Because of that, tax liability of the business sector is going to decrease. Not only this, as a result, the tax collection of the government is going to reduce. Because of that, tax GDP ratio is going to reduce. And not only this, that it is considered to be that in case of India, tax rate is in high territory. And since it is high territory, because of Laffer curve, the tax revenue is not optimum. Because of that, there is tax evasion and tax avoidance. So tax rate should be optimum. Tax base should be broader. That means only 1% of population of India pay the taxes. That should be increased, but tax rate should be reduced. So that is also the reason. Other is there is constant dispute between the tax authorities and the taxpayers, because the tax system in India, in case of India, the tax system is complex. The ordinary man cannot understand the provisions of taxes. Because of that, there is frequent conflict between the tax authority and the taxpayers. Because of that, the tax collection of the government is going to reduce. Okay, not only this, when we talk about, there is we discussed already that there is generous that policies, and the government of India is giving the tax exemption, deduction and incentives to the business sector. That is technically known as tax subsidies. That is technically known as tax subsidy. So that means tax subsidy should not be tax subsidy. That is known as tax subsidy. Okay, not only this, in case of OECD economies, OECD means Organization of Economic Cooperation and Development. That is the organization of 37 countries of capitalist economy. Okay, that means in their case that direct and indirect ratio is 55 is the contribution of direct taxes, and 45 is the contribution of indirect taxes. That means it is in case of India, but ideally it should be 50-50. Okay, so that means in case of OECD countries it is 50-50. So that is also the reason. So there is need to increase, that means the we can increase the tax collection. Okay, be the case of direct taxes or be the case of indirect taxes. Now we are going to discuss that what is going to be the consequences of low tax GDP ratio. What are going to be the consequences of the low tax GDP ratio? So what is going to be the consequences? The very first consequence, we can say that Are you getting me, dears? Let me know. Are you getting me, dears? Let me know, dears. Are you getting me? So what is going to be? The very first thing is that if the government is going to reduce the going to have the low tax GDP ratio, and government is going to have low taxes in comparison to GDP, definitely government is going to have the less resources. If the government is going to have the less resources, government cannot spend on the national security. Government has to compromise with welfare. Government has to compromise with public goods as well. So that means the investment capacity of the government is going to reduce. There is heavy. That means when there is going to be more, the tax GDP ratio is not going to be optimum, or it is going to be less than 15%. That means as per the recommendation of the World Bank, then definitely the government had to borrow. Government is continuously borrowing, and because of the borrowing, government that means interest payment liability of future is going to decrease. And we have already discussed that when we talk about that revenue expenditure, the greatest weightage is to the interest payment by the government. That means whatever past loans we have taken, we are continuously paying high interest. So that is again going to, that means government of India, although government of India is never going to be, but there can be the problem of fiscal, that means fiscal trap. So this is going to be, so that means and in that that when there is low tax GDP ratio, why there is low tax GDP ratio? There is low tax GDP ratio. Let me know, dears, are you getting me? Is there anyone? Is there anyone? So what is going to be that in that condition? What is going to be that there is going to have the, okay, that government, a government or the political parties are taking the steps or taking the measures which is more lucrative just to have the vote bank. That means they are going to do the waiver of loan waiver, okay, and because of that there is political incentives for the government to borrow money to buy the votes, okay, rather than work on the buildings and effective tax system, okay. And there is widespread tax evasion, and this increase the dependence. When the tax revenue is going to decrease, it is going to decrease, or it is not optimum, it is going to increase the dependence on indirect taxes, okay. That means if the direct taxes are not going to increase, or the indirect taxes, okay, that tax GDP ratio is not going to increase, or direct tax collection is not going to increase. That means indirect tax, the burden of indirect, if the contribution of indirect tax is going to increase, definitely what it is going to be, that is going to be that means burden the common man, okay, that is known as regressive, okay, because indirect taxes are regressive in nature. Regressive in nature means it affects the poorest most. So this is also the consequence, and there is increase in social inequality, okay. Social inequality is going to be increase distribution of economic resources in the society. So these are going to be the consequences of low tax GDP ratio. Now we are going to proceed further, and we are going to discuss that what should be the way forward. When we talk about the way forward, what should be the way forward? So the thing is, as I said, that the tax rate should be reduced. Whereas tax base should be widened. What does it mean? As I talked about, that if the tax rate is too high or it is too low, then definitely if it is too low, then there will not be optimum collection of taxes. If it is too high, that as per the Laffer curve, that rather than paying the taxes, the individual will try to avoid the taxes, or individual will try to evade the taxes. Because of that, in that condition as well, the there will not be optimum tax collection. So be the case of low tax rate or be the case of high tax rate, that there is not going to be optimum tax collection. So that means for that what should be there, that the tax rate should be optimum, but we have to broaden the tax base. Tax base means, that means more and more individuals should come under the tax net. And in case of Indian economy, it is said to be, that that there is high tax rate in India. Because of that, there is tax evasion and tax avoidance. Because of that also, there is decrease in that tax collection. So just to solve it, what should be there? That we have to reduce the tax rate, but at the same time, we have to broaden the tax base. Tax base means we have to come that more and more individuals should come under the tax rate, tax net. Only the 1% population is paying the taxes. Okay, so that should be increased. That is the meaning of tax base, increasing the tax base. Okay, next is there should be effective tax dispute settlement. Okay, effective tax dispute settlement mechanism. Not only this, when we talk about, there should be the simplification of direct tax laws, as I talk about, that many times that individual not intentionally try to avoid or evade the taxes, but they unintentionally, because our tax system is complex. That cannot be understood by a common man, that can be understood by the experts. So because of unintentionally, many times the individuals are avoiding or evading the taxes. So there should be simplification of tax system. Okay, so that means so that it can be understood by each and everyone, as it was said by the Justice Ishwar committee. Okay, and lot many steps has been taken in this regard. Okay, there is something which is known as direct tax code. Okay, and this direct tax code is nothing but the reform in the direct tax system. Okay, like indirect taxes we reformed in the form of GST, goods and service tax. Similarly, the direct taxes, in case of direct taxes, there is proposed reform that is known as DTC, direct tax code. This direct tax code is nothing but simplification of the procedure. Okay, unlike reform in indirect taxes, which is going to change the entire structure, the DTC is not going to change the structure, but it is going to make the procedure simpler. So that is the meaning, that because most of the time that direct taxes are complex, the procedure is complex, that's why it is not considered that understood by the common man. So it need to be simplified, so that more and more people can be incentivized to pay the taxes. And government of India has taken lot many reforms in that regard as well. So that is also the case. There should be that GST should be, that means they are talking about the project system and project insight. Okay, that in case of GST, for more and more effective implementation of GST, there should be project system and project insight should be implemented. Okay, so that there should not be tax evasion or avoidance in case of GST. Okay, in case of GST. So that means in the long run, okay, like the economic survey has also said that farm sector should also be come under the tax net. Okay, that farm income should also be under the tax net. Not, at least not the marginal or the small farmer, but there are some individuals who are having the large land of farm. Okay, they should be included, or those people who have other source of income other than the farming. So that means people who have other source of income, that means farm income of those people should also be come under, at least those people should come under the tax net. Okay, although it is highly controversial, but it has been recommended in the economic survey. that farm sector, because I already talked about that there is 25 crore households, and out of 25 crore household, 15 crore households are in the agriculture sector, and these agriculture sector they are not paying any tax, only 10 crore. So in order to increase the tax base, we have to include these people. So that means that at least those individuals or those people should be included under the tax net who has other source of income other than farming. So that means income from farming should be at least in the tax net. Okay, that means whatever is other source, they may be paying the taxes on that. That may be service, that may be manufacturing, whatever it may be. But if they have, in addition to that source, if they have the source from the farming as well, so that means on that farming, that means they are not, that means a small farmer or marginal farmer or the farmer which needs the support. So at least those people should be included under the tax net. And the last step, we can say that more and more individuals should be motivated for paying the taxes on the name of national responsibility or national integrity. That more and more individuals or nationals should be motivated for paying taxes on the name of national responsibility. This is very, very important. That means there is need to have the awareness, need to make people aware about paying taxes, not to avoid taxes, not to evade taxes. That what is going to be the significance that paying the taxes, how that means government is completely dependent on the for the welfare measures on these taxes only. So people should be that means get aware about these things. So they should be incentivized. They should be incentivized, and they should be make aware about paying taxes on the name of national responsibility. So this is about the taxes. But let me discuss one important thing, that is prelim point of view. Let me discuss from prelim point of view. Very important thing, that be very clear that throughout the 10 years or 5 years, be very clear, because they may ask the question in prelims. They may ask, UPSC may ask the question in prelims. So that means this green that means this green is showing that indirect taxes, contribution of indirect taxes, and yellow is showing that the contribution of direct taxes. From this figure only, and this is from the that means budget document at glance only. So be very clear that throughout the years, okay, that means the collection of direct taxes is more in comparison to indirect taxes. That contribution in tax collection, a contribution of tax collection in comparison to contribution of tax collection is more for through the direct taxes in comparison to indirect taxes. That means, and they will not ask like this, they will ask that from last 5 years or 10 years continuously the tax collection from the direct taxes is more in comparison to indirect taxes, which is going to be wrong. Why it is going to be wrong? Because in 2021, just see the scenario of this 2021. See the scenario of 2021. That means throughout the years, the tax collection through the direct taxes is more in comparison to indirect taxes, except 2021. In 2021, the tax contribution of direct taxes was 4.8% only, whereas tax contribution of indirect taxes was 5.4%. The total tax GDP ratio was 10.2%. But out of this 10.2%, that means collection 5.4% collection was through the indirect taxes, and 4.8% collection was through the direct taxes. So this is the only year in which the contribution of indirect taxes are more in comparison to direct taxes. That's why they may ask that continuously from last 5 years or 4 years or 10 years, that contribution of direct taxes is more in comparison to indirect taxes in tax GDP ratio, which is going to be wrong. Which is going to be wrong, because the contribution of indirect taxes was more in comparison to direct taxes in case of 2021, which is, that's why it is going to be wrong. Okay, and they may also give the statement that the contribution of indirect taxes was never more than direct taxes, never more than direct taxes throughout the years in tax GDP ratio, which is also going to be wrong, because that it was more in 2021. So if they are going to ask the question, and in all other years that contribution of direct taxes is more in comparison to indirect, because in 2014-15 it was 5.5 and 4.4. That means in 2015-16 as well, and that means in 2016-17 as well. Okay, contribution of indirect taxes was more in comparison to direct taxes in 2016-17. So there is 2 years in which the contribution of indirect taxes is more in comparison to direct taxes. It is 2016-17 and it is 2020-21. Okay, so in 2017-19 the direct taxes was contributing 5.9% in tax GDP ratio, whereas indirect taxes contributed 5.3%. Similarly, in 2018-19, the direct taxes contributed 6%, whereas indirect taxes contributed 5% only. Similarly, in 1920, the direct taxes contributed 5.2%, whereas indirect taxes contributed 4.7%. And in 2021, this is exception, that direct taxes contributed only 4.8%, whereas indirect taxes contributed 5.4%. Similarly, in 2021, the contribution of direct taxes 6.1%, whereas indirect taxes only 5.1%. Similarly, 2023, the contribution is by direct taxes 6%, whereas indirect taxes is 5.1%. So it is again, so in 2023 again they are talking about that direct tax has contributed 6.6%, whereas indirect taxes has contributed 5%. So and in that coming year, coming financial year, they are expecting that direct taxes will contribute more in comparison to indirect taxes. So they are not going to ask you figure, be very clear. They will ask that trend only, and in that trend there can only be two statements, that throughout the years, throughout last 5 years, 10 years, the contribution of direct taxes is always more than indirect taxes, which is going to be wrong, because of 2021. And they may ask again, they may ask another question, that contribution of indirect taxes in comparison to direct taxes in tax GDP ratio was never more than, never, that means contribution of indirect taxes is never more than direct taxes in tax GDP ratio. That is again going to be wrong. So that can only be the expected question. Okay, so there is no need to mug up this data. Okay, there is only need to have the idea of trend, and in that trend we have to have the idea that the contribution of direct taxes is more than indirect taxes throughout the years, but there is only 2 years in which the contribution of indirect taxes is more than direct taxes. That is the financial year 2016-17 and financial year 2021. So this is all about our today's session. If there is any doubt, let me know. Otherwise, we stop here. If there is any doubt, let me know. Otherwise, we stop here. Is there any doubt? Is there any doubt? We stop here. Thank you very much, dears. Thanks a lot. Thanks a lot. And to have the PDF of this lecture, you can join my Telegram ID. So we stop here. Thank you very much, dears. Thanks a lot.